to record.
Yeah.
Okay, cool. That's fancy.
Yeah, I deal with these all day because I do IT for a living. So.
Oh, do you? Okay, so you're used to Zoom. Awesome. Yeah. Okay, cool. So backtesting. So approaching any strategy. So my goal here, since we only have an hour, obviously we're not going to be able to solve the world's problems in an hour. But I think what we could do is get you definitely headed in the right direction with developing strategies and actually testing them so that you can build that consistency. Because the only way to get to a point of consistency in your trading is going to be consistently doing the same thing, right? That would be the only way. We'd have to do something over and over and over that makes a lot of sense and keep doing it and stay true to the plan kind of thing. But the hardest part for probably yourself, myself, when I was new trading, like, is what is that plan? What should we do consistently to actually approach it and make some form of money? So the best answer to that question, I would say, is to start really embracing the idea of testing ideas. So let's say that you're looking at something like Euro USD. Let's say that you're saying, okay, this thing is showing some signs of an uptrend, but let's say I want to sort of define what my entry style would be, and then I want to test that concept. So for example, we could just say the simplest concept on earth, right? We look at like an RSI. An RSI is just a simple oscillator. Have you ever seen like an RSI? Are you familiar with that?
Relative strength index.
Yes. Yep.
Yeah. I'm very familiar with the a lot of OBV, like a lot of the tools that use, but some of the time, I mean, I didn't get comfortable with which one was fitting good for me. But go ahead.
Sure. So the RSI, pretty straightforward. It's just a measurement of strength. It's saying, when it's getting up to this point, it is, quite strong to the upside, but also maybe sort of showing signs of exhaustion, maybe overbought. And then if it's at the lower limits, it's showing oversold. So just a really simple indicator. But the point is, let's say you're thinking to yourself, hey, it seems like each time the RSI dips to an overbought or oversold status, it tends to find some form of a bounce. That is a theory. So it's kind of like using the scientific method. You're saying, okay, each time it goes down, what would be the result if I just bought on the close of each time the RSI came into play, right? So each time it goes under the 30 or over the 70, this would just be a very simple idea that a trader might have. You might have this idea, okay, it goes oversold, let me look to buy, right? It's just an example. And then you decide, okay, well, I'd take this buy and let's see what would happen. The idea of backtesting is in taking that idea and basically throwing it on the drawing board and seeing how well it actually would have done historically, right? Because it's one thing to try and, you just approach and say, oh yeah, it's printing oversold, I'm going to buy it. But what would that mean if you don't have some form of like tested historical bias that tells you that, hey, that actually is a pretty good idea? You see what I mean?
Mm-hmm.
So the whole thing is that whatever you have ideas of, like we all have ideas, we all have, we look at the markets, we look at different indicators, we look at different price action, candlestick patterns, whatever you're looking at, you may have your own ideas. And then you may say, well, how well does that actually work? Well, what we can do is we can just start testing. Now, there are obviously more strategies than just, an RSI oversold or overbought reading. And my point, though, is just to show you how to approach testing these concepts. So let's say, for example, right, we take a 50-period moving average and we use the RSI. This is just for, there are better strategies out there, but just for a practice of testing, you look at something like this and you say, okay, we should be, let's say, buying if the market is in an uptrend or above the 50 and selling if it's below. And then we're going to look for oversold or overbought readings. So then what we would do is if we get an oversold reading and we're in an uptrend, maybe that's a buy signal on this candle right here. So the signal was here. On the very next candle, we take the buy position. Let's say we put a buy, right? We put a stop loss underneath structure. And now we're going to say, let's say we're going for like, I don't know, a 2 or 3 to 1. Let's say, and this is, I'm just making this up on the spot as a quote unquote idea, right?
Okay.
So this would be an idea that you may have. And again, the point is once we get off this call and you're back off on your own, my goal is to get you into the thought process of, okay, I take my ideas and I actually go test them out historically to try and see, is this worth my time or should I just skip this entirely? So we do have an oversold reading, right? We also have a price action that is above the 50 moving average. So then that would constitute a buy. We put our stop loss underneath structure, and this trade would have been beautiful. But that doesn't mean a whole lot unless over many trades, not just one trade, but what if we did 100 iterations of this concept to see how many wins do we have and how many losses do we have? So if we're going for, what do we say, 2 to 1? So if we're doing a 2 to 1, right? Risk to reward, right? So we're risking 1 to make 2.
Mid 2,
right? So we've got our stop loss in place. We've got our take profit in place. We take 100 trades by doing this concept. We go through the chart and we say, we take 100 theoretical trades, right? Then we say, let's say after all said and done, we have 60 losses and 40 wins. At first, that sounds like, okay, that's not that many wins, but that would be a 40% win rate, which is actually not that bad. So a lot of times people will be like, oh, you need a 90% win rate. You need to win 100% of the trades that you take. That's not really true, in my opinion. I think it's more about catching good big trades when they set up and accepting that losses are going to come no matter who you ask, who you talk to. Everyone takes losses. But anyways, this idea of a 40% win rate, we can actually go, see that if you do this, let's say you took 40 wins, and let's say, for example, we're risking $10 on each trade. In the end of this 100 trades, this would equate to $600 down in losses, right? So 60 times 10, and then 40, 20, right? Because our 2 to 1, meaning that on the winning trade, this would actually equal $800. So after 100 trades, we're not looking at one trade. We're not trying to strike gold on the very next trade we touch. We're trying to make money consistently over time. So if we're going to make money consistently over time, we have to have a strategy that over time makes sense. So this is actually, although it's not glamorous and huge, after all of this, we would have actually come out on top. We would have come out profitable by $200. You see that? So it's your losses, your wins. The net is $200 of profit on this system. That would be considered a pretty good system, because although it's not, you're not like $50,000 up or any crazy amount, just by, risking 10 to make 20 on this sort of approach, if this is what you came out in your back testing, then great, you've got a profitable system. Now, that historically, gives you a little bit more confidence if you were to keep trading the system. If you had done all the work, right? If you take the time to go find this system for you, test your ideas and find something, and you're sitting there and you're saying, okay, historically, this seems pretty good. That would give you a bit more confidence to stick to your trading and to keep doing this, because historically, hey, this has been pretty good. Let me give this an honest try into the future. You see what I mean?
Right.
So that was a lot. Did that make sense? How did that come across to you so far?
Yeah, I mean, the 6-4, I mean, it definitely made sense off of the 600 equals the 60 losses. I mean, it's simple. It's simple. It's real simple, because I think you gave a great concept in this whole backtesting system. People don't look at it as long term. People don't look at it. They're always looking at it as a short term situation.
Absolutely.
But again, you have to look at the system, and you got to look at it on a 2 to 1 ratio. To be honest, I don't like to risk that much of my capital in general. I mean, my partner didn't really have a risk reward. He didn't believe in that. That's why he was about $90,000 in debt. So
right.
Yeah.
And see, that's the thing. So many people, what they do is they pay no attention to the risk management side. They're all about, like, let me just flip this account by doubling it and tripling it and trying to go big. But again, if you don't have an approach that, over time is going to do you right, like you're basically just gambling in the short term, right? Because yeah, you might have a great trade today, but if you stick to a system and you haven't truly back tested it and you take too big of a position on each thing, it only takes, especially if you don't have a stop loss, if you don't have like a risk management
Yep.
plan, it only takes a little bit of heat going against you to get you in a lot of trouble. You know what I mean?
Yeah, and you know what, Nick, you could probably agree with this. Trading is, you got to you got to trade it as a business. But the biggest thing I've noticed, what I've learned about meeting a lot of people, they believe in this leverage game. And the leverage game manipulates a lot of people's mind, because if you don't know how to trade and somebody shows you how to trade Forex, and they be like, well, if you use a 500 to 1 or 1,000 to 1 leverage, you can gain this much money. But that's not trading. That's gambling.
Yes, you are so right. And I wish more people would think just like what you just said. I wish more people would acknowledge that fact. Leverage, little great little side concept there. So leverage is often used. So you should just know, you sound pretty business savvy. You already talked about trading like a business. Well, the brokers use leverage as a tactic. They say, like you just said, like you know that pitch, just like I know that pitch. They say like, oh, 500 to 1 lets you trade your little account like you have a lot of money. What they don't say in that is it also is so much more likely to destroy your small account and leave you more broke than when you started. You know what I mean?
Yes. And even if you use that type of leverage, I mean, trading to having that conservative trading plan, I mean, you can trade 500 to 1, but be conservative. Like, don't risk 30 or 40% of your capital just to own one trade. That's stupid.
Exactly. And that's the thing. If you're really trading like a business, there's a couple things that we got to talk about, because trading like a business can actually be used to help you in your strategies. Because check this out. So if you want to acknowledge like, okay, real trading is trading like a business, what that comes out to is a business, like a true operating business. They're not going to go throwing their entire business on the line in one venture. They're going to take very small calculated risks, and the stuff that works, they're going to keep doing. And the stuff that doesn't work, they're going to get out of there. Right. So, let's say a business, I don't know, they have like an advertising campaign. Let's say they do 3 campaigns and 2 of them don't work and 1 of them works great. What are they going to do? They're going to get rid of the 2 bad advertising campaigns and they're going to keep running the great one, right? So when we're looking at trading, if you're risking like 1% per trade, or at most maybe 2 or 3% per trade, like that's fairly aggressive. That sounds really, really crazy to some of the newer traders who are so attracted to that high leverage, high risk, high reward sort of approach. Because what they hear is that, okay, if you're risking 1%, how are you ever going to make massive flips on your account? And the truth is you aren't, because the other thing about trading like a business is what we know about businesses is it takes money to make money, right? And if you're really approaching trading Forex like a business, you have to realize that trading Forex is just like everything else in the world. It's not this magical gateway to money. It's another business, and businesses take money to make money. So in that case, we have to acknowledge the fact that risking a smaller amount of money and letting that strategy not play out in the next 5 minutes, but in the next 500 trades, that's how we're going to make money. To be consistent, it's risking small and letting that edge play out over the long term. Another way of visualizing it, because I don't know if you're a visual person, but I definitely am. And so like a newer trader, right? What they'll do is they'll throw on 10% of their account, 20% of their account, and put a stop loss in. But that's still not risk management, because, that it only takes a couple stop losses like that to blow the entire account. You know what I mean? Like, it doesn't matter if a stop loss is on the account if you're risking so high. But anyways, in terms of like visuals, right? Successful trading does not look like this. This is what gambling looks like, right? You're taking massive swings on the account. You're risking huge. And when it pays off, you feel like a hero. And when it doesn't, you feel like a real dummy, right? Like, that's not how profitable trading looks. Profitable trading is more boring. Like, again, going back to this business concept, businesses are boring. They look like this, right? It's just slow, steady,
But it's
longer
consistent.
term.
But it's consistent though.
Yes. Yes.
Yeah.
And so again, to generate those sort of consistent returns, the underlying thing that's going to produce returns like this is a slow and steady system that we have truly back tested and that we have actually spent the time to master, right?
Okay.
Because again, you're talking to a lot of the new people out there. They want to make their money fast, and trading doesn't reward. There's this old quote from Warren Buffett. It's an awesome quote. It's basically like the stock market, and by association, the Forex market is a great way for patient people to take money from the impatient people. Like, that's just the fact of the matter, is that it's a great place for impatient people to lose a lot of money and for patient people to stack their money over time. And the thing is, when we're building systems, what we've got to look for is not how much money can I make. So a couple things to ask yourself when you do start this back testing concept. Also, by the way, I'm going to drop you some links after this to some back testing references so that you can spend some more time on that. Because again, I would say this is the concept that very few people talk about on YouTube, on social media, because it's that boring business mindset that nobody wants to hear about. So when we're back testing, there's a couple things I want you to definitely look for.
Okay.
So again, going back to our simple, theoretical idea with the RSI and the 50 SMA, you're testing this concept, you're taking several trades. Let's say you get up to 100 trades. It might take you an hour to do a full back testing session with that strategy. Then what you look for, you've got to ask yourself, what was the win rate of that strategy, right? The win rate, the win percentage. We just did that example where we said, well, what if you had 60 losses and 40 wins? So the win percentage is very, very important, because this is something, sometimes traders prefer a strategy that has a higher win rate, and some traders are more comfortable taking lower win rates in order to get bigger reward, if that makes sense. So your other one is, what was your risk to reward? And then another one is drawdown. This is very, very important. So let's say that you take trades, like let's say that this is your results tab for a second. Let's say that you take a win, a loss, a win, a loss, a loss, a loss, a win, a loss, a win, a loss. And I'm just making this up. Okay. So what we got to pay attention to is that once you have this written down, so this is like the result of your test, right? If you're going to be putting hard-earned money, I think it's really important to test your concepts first. Like, that's why back testing to me is just king. Like, it's just so important. So then you look at this result and you say, okay, well, what was my drawdown like? Because that is what matters. How much pain did I have to go through to make this money that I did in the back test? You might say, okay, well, you have 3 here. And then the worst it ever was 4 trades in a row that were losers. And if we were risking $10 a trade.
Oh, yeah.
You see what I mean? So this would come out to
Negative.
a minus $40. Yes, right. So a minus $40 drawdown would have been our max drawdown.
So you would have been done off of that right there, pretty much.
That would be tough if you had a smaller account, right? Like, if you're but check this out. Let's say that we're operating on a $1,000 account.
Okay.
Now, the reason I point this out is, check this out. If you lose $40 on a $1,000 account, you're still in the game.
Oh, yeah.
You see what I mean? Like, you've got plenty of room to let your strategy keep playing out and to bring this back. Like, that's no problem. But what if we had made the dumb mistake that we talked about earlier? What if we had risked 10%? And now you're talking about $100 losses on each one of these.
Oh, yeah. Come on now.
Now you're more in trouble.
400. Yeah. That's just like if you had $100, if you're in capital, to trade with you was negative 40. That's, I mean, you're over.
Exactly. Yes. So in this case, that's a 40% drawdown. that to me is way too much drawdown. That's like the account is almost toast at that point, right? Like that's trouble territory. However, again, we go back to proper risk management in place. You're risking $10 a trade, $40 down on $1,000 account. That's really not that bad. Like in that case, a 4% drawdown, totally recoverable, and we can still bring things back around. So the point is, this concept right here, that losing streak, it doesn't matter what strategy you're doing. And this is where a lot of traders mess up. They get their strategy going, they see something like this, and they quit their system because they're like, this is not working. I got to find something better, right? I've definitely been there. A lot of traders have been there. But the thing we got to realize is that through backtesting, you'll see, doesn't matter what strategy you pick, there will be times where you deal with drawdown, where you deal with losing streaks. And the problem is they are unavoidable. So what do we do with that? Well, if you know that this is going to happen sometimes, that's why risk management is so key. If you don't have risk management in place, when this happens to you, it's going to wipe you out. It's not a matter of if this happens to you. It's a matter of when this happens to you, are you going to stay in the game and survive and come back to fight another day? Or are you going to blow the account because you don't have risk management in place? Does that make sense?
Right. It does. It does.
Okay. So I know I dropped a lot on you there too. You have any questions about what we just talked about?
I just got a few pointers, things I want to ask you. Okay. I think going all the way around, first of all, the drawdown, I like how you really explained the drawdown, because it was something that I've heard it before, but the way how you explained it really gave me some depth to understand that risk management as a whole, you really have to have your emotions under control.
Yes.
Because if not, if you don't, it goes back to back testing and having a trading plan. If you don't have your emotions under control, all of this really doesn't matter, because you're going to be in the negative more, you're going to be in the positive.
Absolutely.
So the thing I wanted to ask you, just to sidestep, one of your videos you had a while back, I was looking for and I found it. You said something about price action. You traded with price action. So dealing with the back testing involve price action off of that concept under the strategy, so I can understand where that comes in at, because I've heard it before, but the way you showed it on that video, I was kind of confused.
Okay.
Because okay, so the strategy you use, this is one strategy that you use dealing with the RSI.
Right.
The price action is a little different. Is that correct?
Yes. So we could definitely do some price action strategy examples.
Okay.
That would definitely be, I'm down for that. So yeah, definitely let's do that. So I will just to wrap up what we said here, again, a big key thing to say is no matter what strategy you're dealing with, a lot of times a very common bump in the road for new traders is they get a strategy down, they back test it, they feel pretty good about it. They go start trading it on a demo account or a real account. They make, they're out there doing their thing. And then as soon as this happens to them, what they do is they quit. But the message I'm trying to get to you is that you will have losing streaks no matter what strategy you choose. So what's more important is understanding risk management to keep your drawdowns to a minimum, right? So we can stay in the game and keep trading on. Because again, risk management is what's going to keep you in the game. Doesn't matter. Your strategy could be the best strategy on earth. You're going to still experience times like this. The risk management side is what's going to keep you in the game for sure. Compared to anything else, it is way more helpful. Does that make sense?
Yeah. And you got videos on risk management, right?
I do. And what I'm going to do, like I said, after this call, I'm going to drop you some links and some references just to reiterate all the things that we talk about in this, because I want you to be able to, after this call, I don't want you to feel like, oh, well, what was he saying about this? Like, I want you to be able to rewatch this and then also give you some more details just so that on your own time, you can spend some more time on these concepts individually.
Okay. Okay, I
Cool.
appreciate that, Nick.
All right, let's keep moving on. So in that
Okay.
case, you mentioned price action and
Mhm.
how to sort of backtest price action. I've got a
Correct.
little bit of a cheat code here on TradingView, because TradingView gives you this. You got the ability to do one of these. So this is the replay function on TradingView. It only comes with the premium version, which is unfortunate for people who don't have it. But I will say it is a pretty
Okay.
cool feature, because what it does is you can go back in time, and it's specifically built for back testing. So check this out. So I'm sitting here, right? Oh, I just messed that up. Hold on, let me try that again. Look at me. I've been doing it for years and I still mess stuff up. So don't go hard on yourself for sure. So, okay. So we're here, right? And we're clicking on, and this allows me to go at each click bar by bar. And this is how I like to test, but you actually don't have to use the premium version for this. You can still do it yourself just by dragging on
Dragging it, yeah.
MT4. Yeah. So this is what I mean by testing. So if we're looking at price action, right? And let's say, for example, we want to test this idea of like a break and retest. There's a pretty significant level, right? I've got videos on this that I can share with you if you'd like as well, just on defining support and resistance levels. I think this one's pretty straightforward. You've got some demand here, some demand here. So then if price was able to get back up to this point, maybe we could look for some sell side, right? So then what we're doing in the back testing is we're going through and we're saying, okay, if price gets up to that level, maybe we look for a sell. Well, we barely missed it. That would have been a little bit frustrating. But the point here is that, okay, in your back testing, what you're saying is same thing as anything else. You're looking for a signal. You're setting your trades. So in this case, you could pause the video. And let's just say, for example, that we did it perfectly. We're just going to cheat. And let's say right here, right? We took the trade somewhere in that area as price came up to this resistance, and we put a stop loss just above structure, right? Looking left. And let's say we were going for a 2-to-1. Same concept. In this case, we would have taken profit and we would mark that on our back testing results as a win, right? So what I like to do, just to show you this, so if I go to Notepad, what I like to do is I like to pull up a Notepad just like this and do something like this. So just so we could do this, we could do plus. If we're going off of our plus risking 10 to make 20 concept, if we do $20, we would record it here, and then we would just go on to the next trade. So then we're back to here, looking for setups, testing our concepts again, and we may look for a similar concept. So again, if we're going off of that break and retest concept, I'm just skipping around. And this also, like you mentioned with some of the psychology and the discipline side, this can be really helpful because it will force you to really wait for the setup that you're looking for, not to force your way into a trade. You see what I mean? So let's say we've got this level. If that level comes in, maybe we're looking for a sell. Looks like we might have missed that one. And this is the process of backtesting. Okay, we got a big support level here. If that breaks, maybe we're looking for a retest, right? So let's say, yeah, we'll take the trade right here, and we'll see if this trade would have been a win or a loss. We could put some stop loss in place there using structure. I like that area. And again, I know I'm going fast, but I'm just giving you a rough idea just because of time, how back testing this sort of idea would work. So in this case, let's see how this trade would have worked out. So we're still in the trade. We could skip ahead. And let's see if it stops us out or if it hits our take profit. And look at that, it's being stubborn, going back and forth.
Indecision.
It's trying. Yep. So in this case, this is also why you do testing. Sometimes you'll see that this is maybe natural for some of your trades to do something like this. Look at that. It really does not want to hit that target. So we'll just give it more time, and look at that.
Boom.
So that would have been a frustrating trade, right?
How many days? Or is this a daily chart? This is a daily, right?
This is a 4-hour chart. So this would have been a higher time frame swing trade. That's a whole month. So that would have been a long wait for that trade.
Yeah. So you would have got, knowing you would have got out of that trade probably what, within the, because I noticed you buying holds sometimes. You stay in a position for maybe a day or two. You would have got out of there when.
So so here's an example of how I personally approach. What I like to do is I like to move stops to break even if things go in my favor.
Okay.
So in this case, maybe on this move somewhere around here, I may have looked to move stops to break even. So I might have moved stops up here and I would have been out of that trade for break even back here. Just because
Okay.
that's sort of my approach is I like to move stops with my trades. That's sort of my style of trading.
Got you.
But the whole point here is that, whatever you feel comfortable with, if you like price action, then by all means, test your concepts in price action. And this is sort of the other side of backtesting is, okay, you say, hey, I don't want to get caught in trades like this. Maybe I incorporate a way to stop out of a trade if it takes too long. Maybe I choose to move stops to break even. And then on your next backtesting session, you try out your new ideas and you see, hey, which one works better? You see what I mean?
Yeah.
So you're trying out ideas. Like the whole idea of testing is you're trying out and testing ideas and you're tweaking it instead of like tweaking constantly what you're doing in real time in the real markets. Instead, we're testing it historically, fast tracking that process, and then doing it in real time, if that makes sense.
Mm-hmm.
So
Yep.
in this case, with our just the practicing of back testing, we would come in here and now we'd say down $10 on that trade, just sticking to the rules that we had here. We're sticking to the 2-to-1, and if it hits stop, we're out. If it hits target, we're out. So yeah, and then again with price action, that's what we're trying to do. We're trying to basically find the setups, let them play out, and test the ideas that we have. So if we were to do this again, let's look for some form of a breakout. There's a break. Can we get some form of retest? If it does retest, maybe I'll look to get in. Okay, this would have been, and here's a good lesson also on backtesting right here. It's very easy to say, oh, I would have been in right here, but that doesn't do you any good when you're testing to say in hindsight what you would have done. You see what I mean? So let's say we take the trade if it comes up to this level. So you can do this on your own, when you're testing, you set a limit sort of idea if you like limits. And let's say if it comes up to that level,
Wow.
in that case, you got a nice winner there. So that's a nice break to the downside there. So that's the idea. We're just looking for our approach. We're testing the same old entry over and over and over to see how it would have performed historically. Because that's a tool that very few people spend time doing on YouTube because of, look, I mean, we're in here, we're working, you know what I mean? Like this is work to test these concepts, but that's the only way you're going to ever build confidence in your strategy. Because imagine if you're just trying to test these concepts, on the right side of the screen. If you're trying to figure it out over here, it's much harder than taking the time just to go through. We got all this price action historically to try out. We might as well take advantage. You know what I mean?
Man, okay.
Yeah.
It's very good.
It's completely free, right? It's completely free to scroll to the left and to try out ideas, and your skills will be more refined over here than they will be over here.
So I like that tool too. I mean, the broker that I use is CoinEx, MetaTrader. But I TradingView, I like this tool that you use where it shows you your stop, close, your profit loss. I've never seen that before.
It is very cool. TradingView is awesome. I'm not gonna lie. I love TradingView. And you're talking I mean, I've been using MetaTrader for years. So I like both. MetaTrader is great for execution, and TradingView is also great for charting. So I would say, actually, if you're not already using TradingView, definitely try it out. See if it's
I have an account. I just haven't paid the premium yet. I have an account. When you stated it on your content one day, I went on it and was looking through it, scrolling through it. Yeah, the platform is real nice. I really like it. I just would have to learn it a little bit more.
So let me just, for future reference, when you're watching back this video, if you want to find what I'm using to show those tools, I find those very helpful as well. What you can do is just head over to your bar here, and you're going to come down to prediction and measurement tools.
Okay.
And then you've got the long and short positions tools.
Okay.
And that's what's going to, like, for example, let's say I'm taking a long position on the Euro USD right now. I click that, right? And this helps me visualize. So it starts out at 1-to-1, and I'll explain this here a little bit. So right here, you got your risk to reward.
I got it. Okay. I see that.
You see what I'm saying? So then you've got your target distance in terms of pips right here. So that's currently by default, it's at 49 pips, and your stop loss is 49 pips as well. So let's say I was targeting the previous high. I can use my gauge just to get it right up there. That actually gives me, check this out. So let's say I put my stop loss here, right? I got my stop loss here. I got my target here. And what's cool is that even though I'm using MetaTrader, I can go over and punch in these values.
Oh, okay. I see it.
You see what I'm saying?
But those are okay. So you can put in your entry and exit based off of this, right? Okay. Oh, okay.
Yes.
Oh,
So, because that's a cool feature that by using this tool, even though you're still on MetaTrader executing your trades, no problem. You just use the tool here to visualize. So you grab, let's say you want to put stops under structure, right? You put it right there. You get a reading right here. And even if you double click this, check this out. You double click it. There's your information in detail. You can
change it. Say for instance, risk 1, risk 2, risk 3.
Yeah.
Wow. Okay.
So if I wanted to do, maybe just 0.5%, and just click OK, it'll give you. This is also a cool feature. Check this out. This might be one of the most helpful things that this tool has available to you. Is let's say you punch in, you've got a $1,000 account, and then you say, let's say I want to risk 1% on this trade. So I punch in $1,000 account, a 1% risk to reward, or risk, right? And then it's giving me I put my stop, I put my target. Now what it's going to do is it's going to calculate. Check this out. This is telling me right here that if I wanted to set up this trade on my MetaTrader 4 account, my quantity right there is telling me that I would need to do 4,000 units, which is the same as 0.04 lots.
That is the biggest thing I struggle with, Nick. The lot sizes, understanding the lot sizes. And I'm glad this tool can facilitate and show you that, because that was one of my things when I had an entry or exit of a position. It always asks you about your lot sizes. And for some reason, I've been doing a lot of research on understanding the lot sizes.
Okay, yes, that's a great concept. I'm glad we talked about that, because here's the thing. All that concept that we talked about, risk management, setting up your trade for success, if you don't know how to get the proper lot size, you're going to inevitably be making mistakes there. By having this tool, and there are other tools that you can look. I've got a video on lot size that I definitely can share with you as well. Lot size is very, very important, because if you're going to want to risk 1%, your lot size is what's going to indicate how much you're risking, right? So you got to have your lot size on lock for sure. So if you take this trade and you're risking 1%, and it tells you need to do a 0.04 to risk 1% for this distance, that's going to set you up to risk a proper amount. Because if you do a 0.10, now you're risking more like 2.5%, which is not what we want to do, because that's breaking our rules.
Yeah.
You see what I'm saying?
Yep.
So, okay, cool. Yeah, I'm glad that we talked about that. So again, just to reiterate, so you go on to tradingview.com, you got that account now. This is a free tool. You don't need to pay for anything to use this. You just go to prediction and measurements, long or short position, right? You set that up, you double click, and then you can punch in your account size. You can set the lot size. Like if you choose like, oh, I want to take 0.01 or whatever, you can punch that in. But for our purposes here, talking about, you want to risk, let's say, for example, you choose to risk 1%, and then you punch in your entry, you punch in your target. And by the way, you can just drag this and it will change, right? If I was to do this, it's going to change. Now it's going for 401 ticks, right? So that can be changed as well. So for example, in this case, check this out. If we tighten the stop loss, look at what's happening right here. This is changing. See that?
Yeah, I see it.
So that's changing our lot size. So now in this case, we've tightened the stop loss, and it's saying, okay, if you tighten the stop loss, if you still want to risk 1% on this distance, then you got to change that to a 0.06.
Yeah.
See that? So what that's going to do is it's going to set you up for the proper lot size. And I think that I'm glad that we talked about that, because I didn't even think about that, but I'm glad you brought that up. That lot size management is a very important topic there, to make sure that you know how to do that properly. And this tool should help you out.
Okay.
Cool. So any questions on that so far, what we talked about there?
No, I mean, it was self-explanatory. You broke it down.
Okay.
Needed to hear that.
Awesome. Sounds good. Well, okay. So we talked about, let's sort of recap where we're at. We talked about backtesting.
Backtesting. Yep.
Very, very, very important concept. We talked about a little bit about price action, specifically with backtesting. We talked about risk management.
Drawdowns. Yep.
Right. We talked a little bit about this tool here, the long short position.
Oh, we talked about not only drawdowns, but I think that comes under risk management.
Yes. Well, specifically, we'll mention drawdown just because that is such a important topic. Again, one of your biggest tools to combat drawdown, by the way, is what we just talked about with that lot size positioning and that risk management concept.
Okay.
That drawdown is you're only going to keep that under control if you keep your lot size under control. You know what I mean? A lot of times what people do, a very common mistake, is that they punch in, they just punch in, oh, I'm just going to punch in 0.50 lots. That sounds reasonable. And then when it goes against them, it adds a huge drawdown onto their account. And then they're like, they've dug themselves into a hole. You know what I mean? I definitely think that profitable trading is defensive trading. It's not about being on offense, right? The thing is, we pointed out that with this concept of drawdown, right? With drawdown, you're going to have losing streaks. Another way of saying that is that the market sometimes is just going to be beating you up a little bit. It's going to win against you, and you're going to be forced to play defense. So if your defense stinks, in sports, not that I know much about sports, but I know it's a very common thing to say defense wins tournaments, wins competitions, right? In trading, defense is everything, because it's not about like trying to make a lot of money. Because even if you have great offense for a little while, things are going great, you grow that account and it's going amazing. As soon as the tides turn and the market gets on offense, if you don't have defense, you're going to get wiped out. So the number one thing I would say with drawdown, with risk management, is really focus on playing defense in your trading and focus less on playing offense. Instead, for example, we can re-engineer like everything in our trading if we're thinking about defense first. Instead of saying how much money does this strategy make in our back testing, we could ask ourselves, how well does this strategy protect our money, right? So, because a lot of times people want to take their money and turn it into more money. But the first thing you should focus on, in my opinion, trading in the markets, is not how much money can I make, but how can I first protect the money that I bring to the table so I don't walk away broke. You see what I mean?
Yeah.
That's the mindset part. And maybe here in the last few minutes, I can give you some tips on the psychology part, how to stick to a plan, how to not, make those drastic mistakes, and what to do if you do make those mistakes. Would that be helpful?
Yes, sir.
Okay, cool. So like I said, all of these concepts are very, very important, but it's a lot. There's a lot to remember. There's a lot to practice. There's a lot to master. And a lot of times that can be mentally just a lot. You get frustrated, you make a mistake, and it sets you back. So the first thing I would say is that trading, like you even mentioned, you talked about this earlier, it's a long-term game. It's a thing that takes time to master. It's not something that, even in this call, I can give you as many pointers as possible, but it's going to be something that you on your own have to take these concepts and go practice them and develop that mindset that we talked about earlier, to really get where you want to be with this stuff, because this is no joke. It's not easy. The back testing, that's boring. The price action testing, that's a lot of work. Risk management, that's slow and not exciting. The long and short tool, you got to go play with it, practice it, figure it out. Drawdown, this may be the hardest for myself and for a lot of people, experiencing losses and learning to be okay with that. That's a weird one. That's a hard concept to get used to, but every profitable trader does it. Every profitable trader gets used to times where, again, going back to that concept, if this is our equity chart, right? If this is our overtime profit, in order to have this, we have to embrace that this is going to happen sometimes. If you were to look at this in isolation, just this period of time, you might be freaking out a little bit. You might be like, oh gosh, I don't know if this is working. Seems like it's not working anymore. Things are going bad. But again, you scroll out, you zoom out and look at this thing long-term, you understand that a good, proper strategy doesn't just go straight up. It has ebbs and flows, just like any other real business in the real world. You see what I mean?
Mm-hmm. Yeah.
If I don't know what you do outside of work, but for me, even in my business, things were crazy during the pandemic, and for a lot of people during the pandemic, there was a whole lot of this stuff going on, terrible, times, people losing their jobs. But again, as things recover, it's back to overall. We can look at this in the lens of trading and understand that, hey, you know what? Like, trading success is not every day. Trading success is longer term than that. Another mindset thing a lot of times people get themselves caught up in is things like trying to say, oh, I want to make $100 a day, or I want to make $10 a day. The markets, what we just talked about with the market sometimes going on offense. If the market is on offense against you for the day, you are likely not going to be making any money. Not for the day, at least. And that's okay. Trading success doesn't come from one day of huge profits. It comes from many days of small profits, large profits, and the occasional small loss, right? Like, that's where you're going to make money. So to try and force yourself and say like, hey, every day I'm going to make X number of dollars, or, a percent a day or whatever, that is a really, really dangerous mindset to have in the markets, because sometimes the markets just aren't in your favor. It's like trying to go up the stream. Sometimes it's just not going to let you do it. You got to wait for a day when when you can get up the stream easier. So that, I would say, is another really common pitfall for a lot of traders, is they get themselves into this idea of, okay, I want to make X number of dollars from the market. And that brings me to maybe another key psychological or mindset approach when looking at trading. It's really, really important to look at the markets not as a way to make money in the short term, but rather to make wealth in the long term. Does that make sense?
Wealth, yep.
Because it's not, and I say that from experience, and also just like how I approach the markets. I'm not trying to pull my money out next week to go buy a car. Like, my goal is to put my money in there, let it build, and then reinvest it and let it build and build and build and build, so that someday, I can do a lot with it. But it's definitely having that long-term vision. Those are the people who make money in this stuff. It's not the people who have that short-term, get rich quick vision. And there's a whole lot of it out there on the internet. I'm sure you've seen plenty of it.
Yes. I mean, I live in Atlanta, so I see it every day. So I watch a lot of people.
Yes, sir.
Yeah.
I'm in Atlanta as well, so I know exactly what you're talking about.
Yeah. You stated it. Yeah, I live in Vinings, and I go to Kennesaw State. I graduate next year. So.
Okay, awesome. Good for you. We got a girl in the office who went to Kennesaw, so that's awesome. I went to Auburn, so I went down in Alabama for computer science.
Yeah.
Mm-hmm.
Okay, so mine is information security. I work for a company in Atlanta. We do managed services, everything from cybersecurity to building the infrastructure for different companies, small companies and big companies. We manage the Georgia Aquarium, actually.
Oh, that's awesome. Very cool. So how long you been doing that?
I've been doing that for about 4 years.
Okay, good for you.
That for about 4 years. So
good for you. That's awesome to hear, because, you know, anything that has to do with tech, that's also a great advantage, even in the context of trading, because a lot of times people without jobs or with very not great paying jobs, they come
Right.
to trading because they think like trading is that way to make a huge extra source of income. But the real advantage, truthfully, is for people who are sort of like making money, and this is something that they're doing on the side to help grow that money. I think like that
Right.
mindset is so winning. So that's cool to hear that you've got a solid job, especially in these times. I feel like people can't get jobs, period. So that's awesome. Good for you.
Yeah. Yeah, definitely. I definitely understand that.
Yeah, for real. It's just crazy. The job market is tough right now. And if you have a job, that's just extra icing on the cake, especially in the context of trading. Because if you get all this stuff down, you know, it's going to take time. There's only one guarantee in trading. It's difficult and it takes a lot of time to get good at. But if you do get good at it, the cool thing about having a source of income to
Mhm.
build that account is that you can actually make it really work for you. Once you get those strategies down, once you get things like risk management and back testing and you know, price action, all those stuff tested thoroughly, and you feel confident enough to approach it, that's where you can actually turn that money from the job and you know, supplement it into your trading account if you feel confident to do so, longer term, and really make it work for you. You know what I mean?
Yeah. Hey, Nick, let me ask you this last question.
Yes, sir.
How many because I know you're young. When did you make a decision to walk away? Because you mentioned it in one of your videos I was listening, an
Mhm.
older video. When did you make the decision to walk away from your job to just start trading full time? Like how many years?
That's a good question. And I have a video on that too, just because I've gotten that question a lot from people who are sort of like trying to figure it out for themselves.
No, no, not like that. Not like that. I was just saying that.
No, I understand. I understand. Yeah, no, so for me, I got to a point where I was making decent income from my trading and also from my media business. So you know, we're covering whatever's going on in the markets pretty much
Oh
day
yeah,
to
yeah.
day. Looks
Content.
like writing content on the site and putting out videos on whatever's going on in the world. So for me, it was a little bit different, because it's not like I was quitting my job just to only trade. I was quitting my job to do the business side and to trade. So for me, it pretty much got to a point where I was between the two, making about the same as my job, and
Oh wow.
that's where I quit.
Okay.
And that was after, you know, I started a couple businesses before that, and saved up a lot of money. So, you know, it was definitely not like 1 year into it, I quit and started doing this instead. It was, you
Right.
know, my whole life up to that point, saving money and building, you know, building businesses, and then ultimately putting money into the markets and trying to invest it properly. So it was, I would say, you know, all said and done, it was probably 3 or 4 years into my trading career. But I was also in that situation where I sort of had funding to actually make it worthwhile. But again, to hear that you
Mhm.
actually have a job that's fairly good compared to, you know, if someone's doing this and they don't have any money coming in, it makes it a lot harder to ever make that money really work for you. You know what I mean?
I mean, you just, again, if somebody could sit back and just look at your life and look at your older videos, because I sit back, I mean, I try to do things on my own.
Mm-hmm.
You came a long way, and and through your skill, I applaud you. Like, because when you're first, they were granular back then, but you've got enough content behind you to show that you've paved the way for yourself, but you've gained a lot of knowledge to
Oh,
perfect what you're
absolutely.
doing daily. So yeah, I
Absolutely. Well, I
applaud
appreciate that. Yeah. And it's been a fun journey because, you know, just by doing this for so long and sharing ideas and testing concepts and doing research, I've definitely been able to learn a lot more myself, even because the thing is too, trading is not something where it's like you wake up one day and you just know everything and you're a genius and
you. Oh
you're a
no,
millionaire.
yeah,
You know,
yeah,
it's a
yeah.
never ending learning process. And that's honestly also why I stay so interested in markets. It's interesting to always be learning stuff. You know what I mean?
Yeah, entities and everything else. Yeah, it's
Absolutely.
market is yeah, it's a lot. It's a lot to learn, but it's interesting because you can learn like Forex. I see that you deal with options as well, right? You trade
I
options.
do. I do. sort of stock invest. I don't really get into options personally, but I do trade some of the indices, and I also invest in stocks. So a little bit of diversification there.
Why not options? I'm just curious, not to put you out there, but I just wanted to know why. Because a lot of people say it's buying shares is one thing, but buying options, puts and calls it's all risky, but you don't. I just didn't understand why people prefer to do options rather than buy shares of the company.
Yeah, that's a good question. So I think like for options specifically, it adds two things. Number one, it adds a lot of leverage, which can be great if you catch the right move. Obviously, it can be not so great if it goes against you. But then it also adds a variable that is tricky to me. It's a little extra added trickiness, which is the time variant, right?
Oh,
you
expiration.
Right. Because if you add in, okay, I'm putting a call on this. What that also means is that it's got to move here in the next couple hours. Otherwise, the value is going to start significantly dropping. If it's like a weekly call option, that definitely adds an extra variable. And for me, just with my style of trading, it doesn't fit super well. I still think options are a great like vessel for a lot of traders out there. But again, that's why we're talking about this concept of back testing and figuring out what works for you. Cause I might not love options, but you might be like, man, that's my jam. Like I can do options all day. I understand it. I like you selling options or buying options. Like that's a whole nother thing to go test. The whole point, like my main focus with you today was to hopefully get you thinking like, okay, let me go test these ideas and find what really works for me, spend the time, do the homework, and get to that level of understanding that you feel confident enough to, you don't need anybody else to tell you what to look at. It comes from self-reliance kind of stuff. You know what I mean?
Got you. I appreciate that. Thank you.
For sure. Well, awesome, man. I think that's pretty much time. I really actually enjoyed this session with you. You seem like a really nice guy. I'm excited to meet someone who's a fellow person in Atlanta.
Yeah. I stay in over there in Vining, so
For sure.
It's cool. It's cool.
Awesome, man. Well, again, like I said, I'm going to be dropping some stuff for you privately, just the messages and things like that I've mentioned with some various videos that might be helpful to you on some of the stuff that we talked about on the call. And if you have any questions, feel free to shoot them my way. And I look forward to hearing from you soon.
Appreciate it. Thank you, Nick.
No problem, man. Okay, I'm going to stop this screen sharing and then we will hop off the call. Thank you so much, man. Good luck with everything. And like I said, I'll be sending you an email shortly.
Appreciate it. Thank you. Have a great day.
No problem. You too. Have a good one, Eric.
Bye. All right.